So I know what you're thinking.
Buying real estate for just $500? Tom, have you clickbaited me?
Maybe you're also thinking,
is now really a good time to get into real estate?
In this video, I'm going to explain how you can buy real estate with just $500 and even less on the stock market. And I'm going to outline the specific type of real estate which could be set to thrive with everything that's happening in the world and all of the craziness that is going on. So let's imagine one day you're with your friends. You're all sat around talking to each other and you're saying,
I wish I could get into property, but I just can't afford the initial deposit.
Your friend turns to you and asks you how much money you have saved up. You say back,
well, I have 20,000, but the problem is I need a minimum of 50,000.
Your friend says, well, isn't that annoying because I have 20,000 saved up too, and I've been trying to get into property. Your other friends start chiming in and you realize you're all in the same situation. So one of you has this bright idea. Why don't we all put our money in a pot and buy some property between us? Now that's pretty smart. So pleased with yourselves, you go to the bank and they say it's okay. They're happy to give you a mortgage. Best of all, between you and your friends, you can actually buy a few properties, not just the one. So you get everything sorted and then you say,
wait, does anyone actually know anything about real estate?
Okay, so it turns out that none of you are experts. You made a little bit of an error there. None of you are experts, so you decide to hire a professional, somebody to pick out the properties for you and collect the rent from tenants every month. Now let's imagine, instead of it just being you and your friends, we have a huge group of investors all across the country. Sounds great. You'd have a much larger pot to buy properties with, which means you can spread your money between more of them, and that professional that you're paying to manage the properties for you, well, now their fees won't cut into your profits quite as much because it's a larger pot. The only problem is, how do you trust the other investors you've never met? After all, it's not exactly the same as when it was just you and your friends. So what you need to do is you need to put a legal structure in place. You need to set up a company. Now, you're going to be protected by the law. Once you've done that, what you now have is a large pot of money managed by a professional in real estate, and your investment is protected legally. That right there is called a real estate investment trust, or a REIT for short. When you invest into one of these REITs, you're buying a small portion of the many properties that it holds. Therefore, you can make money in two ways. Number one, you can make money when the properties rise in value. And number two, you make money when the tenants pay their rent every month. So you know when you go on apps like Robinhood, Webull, or Trading 212, and you see shares in the companies in the stock market. You know, you might see Apple, Facebook, Google, etc. Well, you can also find various real estate investment trusts, or again, REITs for short. They're on the platform too. That's right, these large pots of real estate investments are available on the stock market. And that means you can invest into real estate just as easily as you buy shares in a company. That right there is how you can invest into real estate with just $500, or in many cases, even a whole lot less than that. But I know you still have some questions. You're probably thinking to yourself,
how does this compare with owning regular real estate?
You're probably also thinking,
how do I know which investments to pick? I'm not a professional in that.
Well, I've got you covered, and I'm going to offer you some specific investments, some specific REITs that you can take a look into shortly. But first, how does investing in a REIT compare with buying a property for yourself? Well, first off, REITs trade on the stock market. Regular real estate investing, where you buy just a single property for yourself, is great. But what I love about stocks is they're just so easy to buy and sell. All you have to do is pull out your phone and click a few buttons. When you want to sell your stocks, you don't have to list it on a website like Zoopla or Rightmove. You don't have to tour people around it, and you don't have to wait for months before someone eventually buys it. No, when you want to sell your stock, you simply click the sell button. And because REITs trade on the stock market, you can buy and sell them just as easily as clicking a few buttons, just like buying and selling stocks. And unlike regular real estate, it's usually sold in a matter of seconds too, not months. Having the ability to buy or sell real estate quickly and easily is a huge advantage. Once you buy a REIT, you can sit back and relax. That's your job over. You don't need to arrange for tenants to stay in the property, you don't need to hire a property manager, and you don't need to worry about tenants calling you up because their boiler has broken down or something like that. Because there is a professional team in place to handle everything for you, you don't have the headaches that a regular property owner tends to have quite frequently. Again, think about it like stocks. When you invest into Facebook, you don't exactly have Mark Zuckerberg in your ear every 5 minutes. Mark, calm down. Calm down, those are just rumors. Okay, nobody knows. Nobody knows for sure. Okay? Just repeat after me. I, Mark Zuckerberg, am not a lizard person. Okay, good man. Good man. There we go. Glad we got that sorted. Now you can go sort out your haircut. When you invest into a REIT, you're usually buying a small slice of hundreds of different properties and in numerous different locations. So I often talk about spreading your money between lots of different investments. Well, with just a few $100s, you can actually build a well-diversified portfolio of real estate. That's two advantages in one. Number one, diversification, and number two, an incredibly low barrier to entry. But maybe the single largest advantage of a REIT over buying regular real estate is that you share the upfront costs, land surveys, etc., between every investor. Now, I get this might not sound like a big deal, but the truth is that some estimations indicate that this means investors into a REIT save 4% more on day one than traditional real estate investors buying a property by themselves. And 4% might not sound like a lot, but it makes a huge difference to our return on investment after you begin to compound this for a few years. However, let's not rule out regular real estate investing. With buying your own property, if you know an area especially well, you can sometimes find properties for below their market value. If you can spot a good deal, you can add 5 to 10% onto the value of the property immediately. You also have the control of what's going to happen with the place. So if you want to renovate it, you might be able to add another 5 to 10% on your money pretty quickly. But again, you will need to know what you're doing to take advantage of these two things. There are also some tax advantages. When you own a property, you can depreciate the cost of the property over time, meaning you'll be taxed less on your rental income. Also, with a REIT, the dividends that you receive, i.e. the rental income, will be taxed just like your regular income. So if you're already in a higher tax bracket, you might end up paying out more in tax with the REIT and less in tax with regular real estate. Overall, here's how I see it. If you have the time and the money and you're smart about it, investing in regular real estate might be likely to give you a higher return. If, however, you don't have the time or the cash, or like me, you just don't know regular real estate like the back of your hand and you're not an expert in it, then investing in a REIT is an incredible way to invest into real estate with no expertise required, a very low upfront cost, and the ability to buy or sell like that. Now, I know what you're thinking.
But Tom, if the high street is dying, aren't REITs going to suffer?
No, not at all. There is actually a bit of a misconception of what REITs are. Most of us have heard that REITs are commercial properties, and the first thing that goes through our minds when we hear the word commercial is a shop. But REITs actually come in all different shapes and sizes. Sure, some of them are made up of shops, and to tell you the truth, I probably wouldn't go near those REITs at the moment for some, I think, quite obvious reasons. But some REITs are focused on residential properties. Others even invest in things like distribution centres for online businesses. Think giant Amazon warehouses, for example. Investing in a REIT focused on helping online businesses is very different to investing in a REIT focused on high street shops. In fact, they're pretty much the opposite of each other, and yet they are both REITs. Now, I don't know about you, but I find it so frustrating when you watch these types of videos and it's all just theoretical. Like if I just cut now without giving any real examples and just saying, thanks for watching, that's the end, I'll catch you again soon. I find that frustrating, so I want to provide as much value to you as possible and not do that, which means giving you some actual examples of REITs that you can look into after this video. And I'll provide a link below which you can use to sign up to Webull. Webull is a free stock market trading app where you can buy the REITs discussed in this video, And when you use the link in the description, you'll also receive 2 free stocks worth up to $1,600 while supporting this channel at the same time. So let's talk about them, these specific REITs. The first and most popular REIT in the USA is known as the Vanguard Real Estate Index Fund ETF, with a ticker symbol of VNQ. The goal of this REIT is to track the performance of the MSCI US Investable Market Real Estate 2050 Index. Or in a language that we can all understand, the goal of this REIT is to invest into numerous different other REITs, and as a result provide us with a value which should roughly go up and down as the whole REIT market rises and falls. As far as REITs go, this investment is like the granddaddy, and it's easy to see why too. If you don't know anything about real estate or REITs, this investment will give you great exposure to virtually the entire market. However, the downside of this is that it means you will be investing into some REITs which do have high street stores as part of their investments. When you buy the whole market, you're going to be buying virtually every sector within it. Therefore, instead, if you like, you could take a look at something like the Mid-America Apartment Communities REIT with a ticker symbol of MAA. This REIT is focused on delivering full cycle and superior investment performance for shareholders through the ownership, management, acquisition, development, and redevelopment of quality apartment communities in the Southeast, Southwest, and Mid-Atlantic regions of the United States. As of September 30th, 2020, they had ownership interest in 102,105 apartment units across 16 states and the District of Columbia. Or said in another way, investing into this REIT means buying a small portion of over 100,000 apartments across 16 states in America. Now that is a well-diversified set of residential investments. We also have the Stag Industrial REIT. They are a real estate investment trust focused on the acquisition and operation of single-tenant industrial properties throughout the United States. Think more like distribution centres and warehouses. And finally, in the UK, we have the Tritax Big Box REIT. They are the UK's leading investment company focused on larger scale logistics real estate. Again, think distribution centres and warehouses. So those 4 REITs are just a few examples of the numerous REITs out there. And for me, the way I see it is that real estate is a great area to get into. It can provide diversification benefits away from the stock market, and it can offer some really healthy returns if the sector is right. For me, as someone who doesn't have as much money, time, or expertise to go out and buy my own properties, REITs offer me an incredible opportunity to get into something I wouldn't necessarily be able to get into otherwise. If you're in a similar situation to me, I hope you find this helpful and research these opportunities in greater depth after this video. Now that you know about REITs, comment your thoughts on which is better. Do you like regular real estate investing, or would you prefer to invest into REITs? I want to hear what you have to think. Every Tuesday and Friday, I share videos like this on finance and investing. Subscribe now so you don't miss them. And of course, thank you for watching.